afternoon, everyone. I hope everyone is fully caffeinated and hydrated as we start the afternoon session. Dominique, Senequier, thank you so much for joining us. Now, I want to try and get inside your brain because of everything you've built to talk about disruption and what we're seeing at the end of 2025. If you look at AI, if you look at geopolitics, there's just a lot for a lot of people in the room to contend with. So what do you think has been the biggest change in the last 5 years for investors?
I think the biggest change is the speed of change. Everything is going very fast. Everything is changing every day. And if you go only, let's say, 2020 is a COVID, then suddenly many companies had zero turnover, which was very unusual. Then you had the Ukraine war and the price of gas, which went to the sky. And then you had this Middle East huge war. And then you had the tariff, and the tariff led to a lot of negotiation around the world, and negotiation, I give you that, and you must invest that. And so it's a kind of, we say in French, a brouhaha, which is not the best for investors because they don't know how to judge, and they are obliged to take a long-term view. So it means they must, let's say, look in depth and look what is in this brouhaha, what are the main points. People thought it was tariff, and in fact, today, not sure the tariff were so important.
I mean, and this brouhaha is basically cutting away the noise from what really matters.
Absolutely.
What do you think are the real shifts that we're seeing in our societies?
It's going very fast, but you know, and when you make a study, then sometimes 2 weeks later, the study, you need to rethink about it, okay? So I think you need to look in depth to some situation, and because we manage so much money, we are forced to look at the big numbers around the world. And the stock exchange in US is very big. It's around $68 trillion. It's twice the weight compared to the weight of the GDP of US in the world. So you can ask yourself and wonder, is it too high? There will be a crash. And in fact, when you look in details, half of this, $30 trillion, is only on 20 companies. And those 20 companies, they are only at a price earning of 26, which is not huge. We had in the past more. So you can wonder, what is the problem? How can it fail? And so if then it goes down to 22, it doesn't make such a difference. So you are forced to then look aside, said, okay, artificial intelligence, what's going around? And there, I can go in more detail if you want, but there are some question marks, of course.
Yeah. Do you worry about AI valuations? Because there's so much money being plowed in.
Yes. I worry for many reasons. I worry first because it looks like the .com, which is creation of value, which is, okay, we are going to invest $2-3 trillion, and the revenues will be $30 trillion. Is it right? Not right, okay? And yesterday, that's why it's changing every day. Yesterday, you have seen tension on the price of CDS, on the private credit, which is for the data centers, and one company went down by 40%. So first, the assumptions of revenues are a little weird, strange. Second, many of the private debt which is financing is held in SPVs. Those SPVs are not always consolidated, which looks like the subprime. You know, the subprime crisis was because many of the SPVs holding the subprime were not consolidated into the banks. And then third, the amount of investment is such that is the private credit market going to follow? I don't know. So there are 3 question marks, and I think we will have phenomena.
But do you think that the bubble will burst? Because you could have, high valuations for AI that eventually catch up. But do you think that something ugly could happen in the next 12 months?
Is there begin to be look, 2 months ago, if you remember, Meta produced some numbers, and the financial analyst said okay, now we have some doubt on the business model of Meta, and is all what they do in terms of investment, will it be necessary for the Meta business, okay? Yes, this is necessary for Facebook. I mean, for Google, you can understand it's necessary. For Facebook, not evident. So I think, and then the market cap of Meta went down by 200 billion. 200 billion, it's maybe one of the large cap of the French market, okay? So it's a lot. But it has no effect on the $68 trillion of value of the S&P 500. This is why this, I would say, this huge volume of the market cap of the S&P 500 allows some downturn, okay? Even if NVIDIA is divided by 2.5 trillion on 68 trillion, okay, minus 2% or something like that. So I think it gives them some room to go down and to absorb a crisis. You can have minus 10, minus 15, but I don't see a... Maybe I'm totally wrong. I should stay very modest. Never make a forecast in finance. Never, never, never. But let's say...
But everyone would be disappointed if we don't have forecasts.
To see minus 66%, like we saw during the great financial crisis, I am not anticipated that. And I will add one short thing. If you take Microsoft produced $130 billion net profit after tax a year.
But so if there is a market event, and if they lose 10 to 15%, will the big ones be okay and the smaller AI companies be in trouble? So do you see consolidation, or how do you see that developing?
But this is exactly, I'm sorry, like in the .com. You remember on the screen there was a cemetery of all the dead companies? And even Amazon was not in such good shape, and now Amazon is maybe worth 2.5 trillion or 3 trillion. So I think, yes, sure. But that's why Philippe Aghion had been awarded the Nobel Prize, okay? Innovation creates disruption, and it's good. It's good. It creates employment somewhere else.
So how do you see AI changing the way businesses and companies operate?
Sure. I must say modest, also I'm not a specialist of artificial intelligence, but I read a lot about it. What they call generative artificial intelligence, maybe some people are beginning to criticize, and not the least people, but someone like Yann LeCun, who is coming back to Paris and launching a company which will be more with the view. So many people are saying that generative artificial intelligence will be disappointing, and that it will be more applied to certain specificities, that it will be more useful. So I believe in that. I believe in that.
Where does Europe sit in this? Again, if you look at AI, there are very few AI companies. I hear more and more businesses worried about being maybe over-reliant to the US. Is it something that you think about?
Those 20 companies, okay, the GAFA and the Magnificent Seven, okay, they are so big, so big. You know, we have not been able in Europe to create a 1 trillion company, not. The largest company in Europe is ASML, which is $380 billion. It's not small, but it's not at this level. We are all very dependent on the GAFA for Google, except the Chinese, because they forbid Google, so that's it. But as long as you can have Google, you can have Microsoft, and how can we replace Microsoft in Europe? And now it's also about the cloud business. It's not only about the service of Microsoft, it's also Microsoft Cloud. And so for the time being, we are very dependent. We have created Mistral. It's a very big success, but we don't have a software equivalent to Microsoft. So we are very dependent from US. Whether it's good or not good, we must admit.
Yeah. You personally are one of the most powerful people and women actually in finance in Europe. Can you tell us a little bit how you built Ardian and how you have changed it and seen it change over the years?
it's not the same world. I built it in 1996, when Claude Bébéar was still alive. He just died, and I paid tribute to him. He was such a great entrepreneur. And he had this idea because during the financial crisis in 1992, because, you must look at the world. The world has been always with financial crisis. He bought, if you remember, Equitable, which was bankrupt. And he found a company inside, which was an asset manager, Allianz. And Allianz was managing not only the Equitable money, but twice more. And so when I jumped into the job at AXA, he told me, Dominique, I will give you one and you raise two. And so we took this model during around 20 years or less, and it worked very well. And then we added new specialties. And now we are at generation 9 or 10th. We manage $200 billion after 30 years. And we have 20 offices around the world. And we have a variety of let's say, different kind of business like secondaries, infrastructure, buyout. And the company is very solid because it is highly diversified, and we have an excellent team. So for me now, I've built this, and I made my succession 2 years ago. And I must say I'm very proud about the culture of the company.
Does it make a difference because you're European?
Certainly. And also, I would say, the entrepreneurial culture. Sometimes the private equity business is criticized because people are too much focused, too greedy on money. And I think the fact that Ardian was built about a culture of entrepreneurial spirit, which is developing, finding new asset classes. We went into real estate 7 years ago, and now I don't know if you saw the announcement. We bought 10,000 square meters, the Yves Saint Laurent building in New York on Fifth Avenue. So we are very proud of that. It's something to build a company. It's something very different to think only about money. It's just, I would say, nearly the opposite.
So it's the thrill, actually, of building something.
Yes.
Is it easier to build something now or harder?
No, harder. In finance and in my business, very hard. Because the people who provide you the money, they ask for size. They want to be at ease for every kind of due diligence they do. ESG, artificial intelligence, we come back to that, compliance, all the due diligence on all the support function became very, very important. And so if you are small, it's difficult to afford to have all those expertise.
So when you built Ardian, it's you also chose places like the secondary market,
yes,
which is very hot at the moment.
Yes.
How do you see that developing?
This is the liquidity market of the private equity market. And at a time right now where the exits are much slower, it's very important to have people like us able to buy 5 billion, 3 billion transaction, okay? So the market this year was around 300 billion of transaction on the table. The deal signs were only 200 billion, so it's a lot. And it's became very sophisticated. I won't enter into details, but I think you can have a session only with someone, and you will be amazed how it is sophisticated. You have now, under the secondary market, you have different specialty. You have what they call continuation fund, you have GP-led, you have LP-led, so it's a universe by itself.
Everything is also now being much more sold towards retail investors.
Yes.
Does that change, actually, the nature of your industry?
Yes, it's different. It's a new way of distributing the products. I think people think that we GPs, we call it general partners, GPs tend to take the initiative. It's not completely true. Why? Because we have this money raised from sovereign fund, pension fund. We are used to it, okay? But if you remember, the great financial crisis, I told you, the downside of the S&P 500 was minus 66%. The volatility of the market is big. And so during that time, the same period, the big minus of a private equity fund, minus 20, minus 25. So I think the retail market understood that for private individuals could be safer or less volatile to have some private equity underlying assets, okay? And so it is now very successful, and we sell by many private banks, and I think it will change a little the landscape, of course.
Do you think now really size matters even in Europe? That if you're bigger private equity, you get better, you're just a much bigger player in the markets with better access to deals?
Yes. Yes, you need to be big. It's a business where you need to be big. First, some of the large sovereign funds in Middle East, they want to deploy 1 billion, 2 billion. You know, we did the Heathrow investment, you know, with the Saudi sovereign fund. Alongside us, they committed £1 billion in the deal. Okay, if you cannot, let's say, discuss with them of this size of investment, you don't exist. And it's the biggest pool of money. I'm not speaking about the Saudis, but if you take the sovereign funds in Kuwait, in Abu Dhabi, and in China, and the pension fund industry, it's the same. The pension fund industry in US is huge. So if you cannot welcome tickets of 300, 500, 1 billion, you don't have access to them. So it's very difficult.
Dominique Senequier, how much do you think about Europe and actually about European companies being more competitive and growing, especially in the face of the US with all of this AI valuation that could go wrong, but also China? It feels like Europe is stuck in the middle.
Yeah, we are stuck in the middle. No. Old Europe. It's still maybe the most pleasant part of the world to live. Let's say that first, which is not a minor comment, okay? Maybe we'll be poor, but maybe we'll still have a beautiful landscape and good food. Okay, your question is very large. I told you we were not able to create a champion, a star. Yeah. And the volumes of the market cap are very important, the size. Why? Because money is flowing around the world, okay? And so they need also to be able to go where there is a huge bond market like the US one, okay? So we failed to create champion. We had so much regulation that I know you are seeing Mr. Pouyanné later this afternoon, so I will quote Mr. Pouyanné. Mr. Pouyanné is saying, and I agree with him, he's fantastic, this man. He's saying Brussels is the only one which is able to create a regulation on an industry which doesn't exist. And it's true, it's true. On hydrogen, they wanted to create papers, and in fact, the hydrogen industry didn't exist yet. So that's a big problem. I will shock everyone in the room. I must thank Trump on that, because I think Trump is making a shock, because he's not in the soft power. Contrary to what they say in the National Security Report of 29 pages, they said America will still use a soft power. I don't call it very soft, okay? But anyway, the way he's negotiating with Brussels, I think is helping us. Because when he had this agreement on 15%, he said, okay, but I don't want your digital regulation, okay? So for the time being, Brussels didn't postpone the digital regulation, but we'll see. What they did postpone under the pressure of US was the CSRD and the CS3D. They postponed it by 1 year, 2 years, and then they increased the thresholds for the companies to follow those regulations. But the US ambassador to Brussels said, no, it's not enough to postpone, you delete. So I think the negotiation is very strong, and it will be in favor of Europe, because we cannot go on like this with so much regulation. It's a big handicap. You know, one of my colleagues said also, even if you want to extract some rare earth, how will you do? 100 years ago, we were able to extract bauxite without any problem.
Do you see it changing? Do you see, I guess, a conscience in Europe at policy level, but also at company level, that we need to be more competitive?
I think all the companies, all the industrial people want to be competitive. But it's like, if it's like a dichotomy, it's people in Brussels in their bubble and the people trying to make business on the ground, and they don't understand each other. And France is also guilty, because sometimes France is in advance. For CSRD, we were, I think, the first to put those regulations at the French Parliament. And now we've deleted for the time being. So I'm not very positive. I think that Brussels will be forced to move, but not under their own inspiration.
When you look at Europe and the rest of the world, is capital being deployed in the right places? Is it finding its way where it needs to be despite tariffs and trade barriers?
I think the Chinese people, for the time being, come more to Europe. They want to invest in infrastructure, in companies. Eventually, if the company is too strategic, maybe the French government or Brussels will say no. But they want to be less in US and more in Europe. That's for the Chinese. We see also some US pension funds coming more to Europe because they were under-allocated to Europe. So we don't miss money. We don't miss big, good and excellent companies in some niche markets. And the industry in northern Italy, in France, we have a lot of good targets. So I'm not afraid by that. But our stock exchange, whether it's the French one, the Dutch one, the German one, are too small.
Do you think they'll grow, or actually is money just
They should merge, all of them.
I mean, there's talk about merging, right? You have certain politicians that
the French is already with Milano and with Holland, but the German people have always tried to do something on their side. Yeah. They did an acquisition, I remember, recently, but it's not on the stock market. But that would be, they should merge. It will be a first step, a clear step.
What would make a difference to you and your business right now?
I think if it is one stock exchange, if you combine, it's 13 trillion. Okay, it's better than 3 trillion for the French market, 3 trillion for the German market. It's too small compared to 68 trillion of... and it's important because the Chinese market is not so big neither. So if you create a huge base, then it helps grow the financing of big companies.
Dominique, through all of your career, was there one single North Star that made you want to invest in a company or take over a company? Was it the management or was it...
Yes, the managers. You pronounce yes. I'm very deeply convinced that you make difference by the quality of managers, of CEOs. And it's very important. Human beings are not robots. And there is a lot now of research currently to explain the difference between artificial intelligence and human intelligence. And the robots are not human and will not be human tomorrow. That's for sure.
What did you see, or was there a Senequier test of people? Because I get asked this question a lot by CEOs, and I'm sure a lot of you are in the room, is how do you know when it's a good deal? How do you know when you want to do business with someone?
You go to the quantum physics and vibration. No, I always in my career, I said, okay, do you want to see this person again or don't you want to see the person again? I want to see you again, Francine. That's a good news. That is very important. If you see an entrepreneur and you don't have the feeling that you want to see him the following day, then don't invest in his company, because it means something, okay? It doesn't mean that the investment will be good, but you need to have some connection and pleasure to see people, because it's not the stock exchange where you sell the company, you sell your stocks every minute, okay? You live with this company and this team for 5-7 years. So you need to understand each other very well.
What is the most common mistake people do actually when investing?
Not to pay attention to the managers.
Because sometimes they don't have
And there is a
enough
name
passion?
for that on the stock exchange. It's called quantitative asset management. They put in computers all the data of companies, they compare the data, and if the data are worse, they invest in the company because they think in the long term. Well, I'm making it very simple, okay?
No, but it's interesting.
And if there are some quant asset managers in the room, they will say, I didn't understand anything to the quant. So anyway, make it simple.
They can come on stage afterwards.
Make it simple. When the numbers are not good, they invest because they think that it will be better because it will go to the average of the companies which are in the same business. My belief is totally different. I think the best companies generally stay the best. Culture, quality of managers, a lot of details.
The culture is extremely difficult, and it goes back to kind of in this world of disruption. How do you keep a good company culture?
I think it's also the culture of a team working, team spirit, to like a success which is produced by a group of people. It should not be only one person. It should be always a group of people. And when you have a success, if you see many people sharing this success, it means it's a good culture.
Dominique, do you worry about private equity in general? There's been a couple of, Tricolor. There were things that made the market nervous. What do you think is the future for your industry?
I don't worry at all for the private equity business. I think it was born in 1976. Now the volumes of private equity are in trillions of dollars. It's a business which is fantastic, where you still see the companies you are buying, you still see the managers. Even in the secondary business, you buy portfolio of funds, but in each fund you have between 10 and 15 companies. And I can tell you my team is following all those companies every quarter. And sometimes they even have, even if they are not the GPs, because we can buy KKR fund, Blackstone funds, we are interviewing the sub-companies, okay? When you buy an ETF, you don't even know, I'm sorry, I'm not making publicity advertising for ETF, but you don't even know how they are built, because they are built by a machine, a computer, and you know, is it an ETF on large cap or mid cap, or do they hedge something, do they hedge it? I mean, I'm sorry, it's like a black box. So I am very for transparency for this kind of reason. I think private equity has a big future.
So what do you worry about the most in the next 12 months, given all of the disruption? Is it AI valuations or something bigger?
I think also the Bitcoin is something which is worrying me because it's $4 trillion, so it's very big. You see the Bitcoin went down. There are some ETF in Bitcoins, which there is not much publicity on that, but I don't think they behave very well. And they have been sold with the approval of the SEC. And if it's worsening, then many people will lose a lot of money. And 4 trillion, 4 trillion is much bigger than the numbers we quoted during the great financial crisis. If you remember, the US government voted $750 billion to save the banking system in US, okay? And we are speaking about 4 trillion. So yes, we have, I don't like also to see appear some frauds, frauds of First Brand, the auto parts company. This is signed in 2002. You had Enron, WorldCom. So everything is not in the good direction. We could have a bad bubble in the next 12 to 24 months. Yes.
Systemic. We're going to cheer you up and then let you and then finish the panel.
You know, stable coins, the Genius Act, which I love the name, Genius Act. What does it say? It says we are creating stable coins. Stable coins can be issued by small companies which will have a small license. It's not regulated by the SEC. despite the fact that it is supposed to buy only dollars and US bonds, okay? And you need an audit every quarter, but they don't say a big firm. So you are printing currency, US currency, without regulation, which is new, okay? And one of the, I won't quote the name, but you can find it, one of the company which is issuing stable coins, the CEO, the founder, has been condemned twice already. So, yes, and apparently USA is expecting to raise $1 trillion in the next 2 years or 3 years in stable coins. The CEO of Lazard gave me the number. So it is frightening. It is frightening.
Thank you so much for joining us today. Dominique Senequier.
Thank you so much. Thank you so much.